Good morning. I'm Umesh Dixit, your accounts teacher. Students, I have already sent you a balance sheet. Here, I'm going to explain you the balance sheet one by one. The very first heading is equity and liabilities. Under this topic, I will explain you the various heads and subheads. If you see the format of the balance sheet, you will find it will start with shareholder funds. The shareholder fund is further divided into three subheading. The first one is share capital. The second one is reserves and surplus. And third one is share warrants. So one by one, I will try to explain you each and everything. The very first heading is share capital. Share capital can be calculated only through working note. You can't put it directly, whether it is given in the question or not. So this thing you have to keep in mind. Now just try to understand how to get this share capital. See, share capital. The very first heading is authorized capital. Now, what is authorized capital? This capital is also known as registered or nominal capital. This is the amount of the capital which a joint stock company authorized for. That means a company cannot issue more than this amount at any cost. This authorization has been given by SEBI and at the time of registration of the company only, and that is the reason it is also known as registered or nominal capital. Here, through example, I am telling you the concept. For example, 1 lakh shares of rupees 100 each has been authorized. That means total authorized capital is 1 crore. Is it clear? 1 lakh shares of rupees 100 each. So total authorized capital will be 1 crore. But one thing you have to remember, that this capital never be added to share capital. It is just for giving information. Now the second part, that is known as issued capital. This is the part of share capital which a joint stock company actually subscribed or asked from the public. That means this is the capital that is required by the company. So it gives an offer to a general public to come and subscribe and be a part of owner of a company. One thing you have to remember, that it should never be more than authorized capital. As I have already given you example, authorized capital is 1 lakh shares of rupees 100 each. So here the company cannot issue more than 1 lakh shares. In this example, company has issued 80,000 shares of rupees 100 each. So the authorized capital become 80 lakhs. This amount of capital will also not added to share capital because it is not actually received by the company. Now come to third part, of share capital that is subscribed and fully paid up. This is the amount of share capital which has been subscribed by the public and amount paid in full. Means this is the actual capital for which company is getting from the public, or you can say the public applied for. This is the part of the capital which is actually subscribed by the public and amount paid in full. Amount paid in full means here, suppose a company subscribed for 80,000 shares, and out of which 75,000 shares provide us full payment. Means the shareholders who are applied for 75,000 shares, they have given us money in full. In full means, suppose one shares of rupees 100 each, that means they have paid rupees 100. Here by example you can understand. For example, if company issued 80,000 shares but public subscribed for 75,000 shares only, and out of which shareholders having 72,000 shares paid the full amount of rupees 100 each, and remaining 3,000 shares received only 80 rupees per share, and they failed to pay rupees 20 per share on due date. So how to solve it? First of all, what you have to write? You have to write subscribed and fully paid up. Under this categories only 72,000 shares will come. 72,000 shares of rupees 100 each. This is the amount which the company actually received, that is equals to 72 lakhs. So this amount will be added to the share capital as it is received in the form of cash. Now the next one is subscribed but not fully paid up. Let's take the previous example only. In the previous example, it is clearly mentioned that public subscribed for 75,000 shares, but out of the 75,000 shares, 72,000 shares has given us full amount, and still 3,000 shares are such on which the company is not going to receive the full amount, as they have not paid the final call of rupees 20 each. Now see the example. 3,000 shares of rupees 100 each, which is equals to 3 lakh. First of all, you have to write the full amount. I am repeating, 3,000 shares of rupees 100 each, that is equals to 3 lakh. Now you have to reduce the amount which is not paid by the shareholders. We call it call in arrears. That is 3,000 shares and 20 rupees is not paid on these shares. So that is equals to 60,000. So this amount we have to reduce it from subscribed but not fully paid up. We have to reduce it from 3 lakh. That means we are only getting 2,40,000. Sometimes it is given in the question shares forfeited. Suppose it is given in the question shares forfeited, then you have to add it. Now the total amount that we have received, that is 2,40,000, under the heading subscribe but not fully paid up. So children, what is the total amount that we are going to get under the heading share capital? It is divided into two parts only. First one, subscribed and fully paid up, that is 72 lakh, working we have already done. Then the second one is subscribed but not fully paid up, that is 2,40,000. Now the amount that is transferred to the balance sheet under the heading share capital will be 74,40,000 rupees. I hope it is clear to you. Now our second heading is reserves and surplus. This is the second main subheading under the head shareholders fund. It consists of the following: capital reserve, capital redemption reserves, security premium reserve, debentures redemption reserve, revaluation reserve, share option, outstanding account, general reserves. So it is very easy to recognize. In most of the cases you will find that the reserve is added, like capital reserve, capital redemption reserve. So reserve is added at last. So you are able to understand that what are the different things that will comes under reserve. Now the second one is surplus. Surplus means profit. So this main heading is consists of two things: reserves and surplus. The category of reserve I have already explained. Now comes to the second one, that is surplus. It includes credit balance as per profit and loss account. Now credit balance means favorable balance. So it may also happen that sometimes debit balance is also provided to you in the balance sheet. Debit balance means loss. So it is to be showed as a negative figure in the balance sheet under the bracket. Under the bracket, that means a negative figure. Now how to get a statement of profit and loss? Try to understand. A statement of profit and loss, this will be provided to you in the question itself. What you have to subtract if it is given in the question: discount on issue of shares, debentures, underwriting commission, if any, share issue expenses, if any, interest on call in advance, if it is due. What you have to add? Interest on call in arrears, which is also due. So in that way you are able to get statement of profit and loss account. Now our third heading under the shareholder funds is money received against share warrant. A share warrant is a financial instrument issued by a public company which gives the holder the right to acquire certain amount of equity shares specified therein at a later date. That means this is not actually issued by the company, it is type of a promise that is given by the public company to its shareholders that in future the company will provide them equity shares at a specified rate. Now this heading is for name only, because amount under this heading is not part of a balance sheet. It is marked by double asterisk. That means only meaning is required. Working is not a part of your syllabus. So student, let's recap it once again. We have just done a shareholder funds, which is the very first heading of your equity and liability sides. This shareholder funds consist of three headings. First one is share capital, the second one is reserves and surplus, and third one is money received against share warrant. I hope you understood. Thank you.